What's up, guys? Welcome back to another episode with AB Investments. Hopefully, your weekend is starting off to a great start. Nothing was different in the market today. As far as pertaining to AMC, we had a total about 14.5 million volume, which is again has been the trend lately, much less than even the average of what we get, and even the average because of that is even dropping more and more, which is not necessarily a bad thing, as I've told you yesterday, and many of you probably might already know this. The when the volume dies out, this is from a trading perspective, from a technical perspective. There's something has to give eventually. It's either to the downside or to the upside, but volatility will come in because a sweet spot it's gonna be is gonna be completely triggered, and that's gonna go through. Now we know that the case is controlling most of the aspects of these things, and um, we're kind of like waiting things out, and it's crazy how everything is being packed in and jammed all to be solved like very 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 soon. I know none of you guys have a problem with that, but there's like there's something that I want to leave everybody with. First, I want to talk about the rest of the market. A lot of people are reaching out to me and saying, "Hey, I don't understand what's happening. Like, it's bad economy and all this stuff, as we say, hikes are happening, interest rates and all this stuff, and yet we see stocks are moving up, and all that stuff." Again, there's a billion and one reasons to tell you that a billion and one other people can tell you that this might be the reason for it. Oh, it's all incorporated in the debt ceiling solution till 2025 is what we need, or that all that is being factored in. The hike rates and all this stuff. Like, one thing you have to understand is, if there is going to be a major drop, and I'm not going to, because I'm not a financial advisor, I'm not going to give any people any hints, or I could, but I'm not giving any people any financial decisions on how the picture looks when it all falls down. You got billionaires, very, very, very powerful people within the system, every day, just about every day, coming out saying that this whole thing is going to is cracking. I mean, the bubble in this, the bubble in that, and busting here and busting there. The one thing I want you to know is, if there is a major drop, it will be very, 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 very good for so many people up there, or people who've been in the market for a long time know what I'm talking about, to have stocks near all-time highs or 52-week highs, if not even above, making new all-time highs, even somewhere around that area, in that vicinity. And then a major drop happens. It happened 2020, happened 2008, happened in 2001, and so forth and so forth. That's just like, history might not repeat itself, but it definitely rhyme. In an algorithmic way, apparently. One thing I want people to pay attention to as well, and especially to the fundamentalists out there, look at other companies, like, for example, look at Carvana. Carvana went from freaking bankruptcy proceedings to now running up to like 26, 27 bucks. Unbelievably high. And guess what? If you go ahead and read their financials, you'll see that they're still operating at a loss. It's just the segment of the fact that they are operating at much less of a loss, similar to where AMC is what makes them, that's the excuse of why this run have happened with Carvana. Now, the thing is, I want people to remember, and for everything, there's always a lesson to be learned. And the lesson I want everybody to learn from just that story, just that Carvana thing and all this, is look at Caravana, look at the automotive industry. Now go to layman terms. Think about the fact that all the tax returns, all the people that have some money. Look at when these stocks have their worst time, like Tesla, like even a little bit of for Amazon. Look at Caravana, all in November and December of 2022, Q4, when it's known that that's one of the worst times for car purchases in the car industry. And companies like Caravana, they're not even the manufacturer, like at least Tesla is. No, Caravana is actually just an e-commerce vehicle seller that just sells like Vroom, like the rest, like these other companies. So every year, these type of companies, they do well in Q1, Q2, and then they start losing all their momentum in Q3, Q4. Don't believe what I'm saying? Go look at the facts. If you don't believe those facts, let time prove AV right or wrong, or let time explain this lesson to you as well, because that's a valuable lesson. If you know what could happen and you know the trend of something before it happens, that can make you a lot of money. And I don't need to get in details of how. But nevertheless, that got, and then look at where Tesla is right now. Wink, wink. You, with all these housing market terribleness, interest rates high, inflation is getting worse, even though it's masked, because the way that they say that it's even 5%, it's because they changed the parameters of how they calculate inflation, which means they can technically just about give you whatever inflation rate they want to give you. And that's why when this whole thing, on this whole charade comes falling, crashing down, guess what? They're going to say, one of the details, one of the headlines, there's going to be a lot to cover. One of the headlines is going to be, oh, inflation suddenly spiked, and they're going to give you some off-the-wall rate. And at that point, you could best believe that stocks will be at a certain stage, and the stage is going to be set for them to surprisingly and magically, lawmakers / billionaires / hedge funds / so many people somehow have exited their positions, or have piled up on illiquid positions that we went over on the live yesterday. I explained to you guys in detail what an illiquid position is, even though there's an illiquidity rule that prevents them from doing from having or locking up up to more than 15% of their assets in illiquid positions. If you don't know what illiquid positions are, or assets, or investments, feel free to go look at the live. I know it's very long, so you can look it up on Google. In fact, no, I'm not going to send you to anybody else. Liquid positions is when the company goes ahead and piles up, or any of these mutual funds or investment groups or hedge funds, they pile up. The liquidity rule tells them you can only put up to 15% of your assets in the company in such things. The liquid investments are assets. I could give you example of like art, houses, long-term puts or calls, perhaps short positions that you cannot unwind within few days or on the go without you exposing yourself to get to take a massive loss on the investment just to get rid of it, especially if it's far out of the money, and far out expiring options, especially like whether it's puts or calls, same falls under the same umbrella. So many companies were getting caught. Like one was just caught last month in May, and got charged, of course, with stupid shit. And we discussed this in the live yesterday. One of them was caught with basically having up to 26% of its assets in illiquid positions, and they got charged a discouragement fee, which tells me since it was from June 2019 to June 2020, that in between those time frames, what happened and what occurred. A shutdown happened, a major dump in the market, and then a reopening of the whole entire market and economy back in the end of May, early June, which is the time frames of when this company was doing this. Since they got charged a discouragement fee, which again is laughable with the amount, that obviously proves to me that these people were loading up on put positions, knowing that something that started somewhere else was gonna come to the U.S. somehow, and then eventually they could. Why not put 26% of their assets, like talk about hundreds of millions of dollars, in all in one basket, like kind of like, like if you forget a startup, kind of like putting all your money on something because you